If you want this podcast free of ads, follow us now on patreon.com/David McWilliams.
What in the world is happening on Wall Street?
Economic indicators.
Who knows where this is going to end up?
To understand the economy, you have to understand human nature.
This podcast is powered by Acast.
How are you? It's podcast time. You know the drill. We try to make economics that little bit more comprehensible, digestible, and hopefully
Sexy.
sexy. John, yeah, we do. We try to make it sexy. How do we make it sexy? How do we make it sexy? Anyway, how are you, Ed?
I'm good. I'm good.
So, John, on Tuesday we talked about what is crypto, what is Bitcoin, with Donald O'Mahony, the guy who many people believe was at the epicenter of the whole thing in the beginning. And the response, has been fascinating, which is why we're going to do it again today. But the response is very much driven, I can see, by people who believe, hold on a second, the stuff that you like, David, the MMT stuff, the expanding the central bank balance sheet, the government spending money, can only be inflationary in the long term. And therefore, which actually I don't subscribe to, but that's neither here nor there, but therefore, Bitcoin and crypto is a legitimate response to a fear of inflation.
Yeah.
So, I mean, before we talk about anything, let's say that is the essence of the crypto argument in economics, that the arguments that people like myself make, and to a degree, Megan Green and, you know, Stephanie Kelton, all those people, they regard as having within its own ideology, if it is an ideology, the seeds of its destruction, which are going to be hyperinflation. Right. And therefore, what these guys say is we're ahead of the game. We're miles ahead of the game because we are buying an asset now that will protect us in the long term.
Right.
So just like to give, I mean, because there's a lot of skepticism about crypto, and yet the Bitcoiners, I feel, sometimes don't get a fair crack of the whip in articulating their view. And so just we'll go there. But what we're going to do now on the crypto issue is we're going to talk to Katie Martin, who is the markets editor of the FT, an old friend, a complete hoot from the north of England. It's like all our mates are from the north of England. Have you noticed that?
Yeah, we've had quite a few recently.
Yeah, we don't have that many from the south. We've all from the north. Anyway, let's go to Sunderland or Clacton-on-Sea or wherever she is and talk to Katie. Katie Martin, we were talking about just off air, Katie and I were talking about great resorts on the East Coast, beach resorts on the East Coast of England, all the way up to Northumberland. Classic place. How are you?
I'm fine.
So, Katie, what I've been doing is I've been watching your market comments on Bitcoin, the price going up and down. But what's interesting is if you look at the comments pages in the FT, they really light up when you talk about Bitcoin.
Oh, yeah.
What's going on? What's the story there?
There's something happens when you write about Bitcoin or write about cryptocurrencies that does not happen when you write about Eurozone government bonds or the stock market or anything else on the planet, from what I can figure out. There's just this enormous engagement from readers, which is great, and it's great to sort of start a debate, and it's great to be part of a conversation. But some of it is pretty vitriolic, right? And I wrote something recently about the electricity usage of Bitcoin mining, and just hundreds of comments. And somehow I found myself caught in an a tweet chain between Elon Musk and another kind of crypto god, Michael Saylor. And my Twitter was completely unusable for a week because it was just like this constant bombardment of people, harassing me and being rude to me and whatever. And I've got a thick skin. I don't mind. People are going to do what they're going to do. But I think what this all tells you is that cryptocurrencies are not just a way to make a bit of money for people who are bored, and they're not just a way to kind of fight back against the monetary machine. For a lot of people, this is a way of life. It is a belief system, and a lot of these people cannot handle any sort of criticism or pushback. And that just tells you that crypto is a really interesting social phenomenon apart from anything else.
Well, let's explore this. Let's explore this social phenomenon, the idea that it's a way of life, the idea that it's almost like a badge of identity. Like, I am a crypto type and you're not. So let's tease that out a wee bit.
Yeah. So, crypto started out as this way to produce a unit of some sort of value that was completely separate from central banks. It's completely separate from governments. It's completely separate from the investment banks that we all know and predominantly do not love for their role in various crises through the years, including in 2008. So, this is the kind of big rage against the machine effort to create a way of transacting money globally and of creating an asset with some sort of value that is separate from all that. And so it's kind of a counterculture in and of itself. And as with any counterculture, as with any kind of belief system, almost, there's an element of, snakes eating their tail, right? They disagree with each other about a lot of stuff.
Yeah.
There are hundreds, there are thousands of these altcoins out there, and each of them has kind of their own separate sets of adherents. I mean, Bitcoin is by far the biggest of the bunch, but nonetheless, there is this sort of narcissism of small differences. There are differences between these coins, and some people feel very strongly about those differences, and they argue about stuff. And also, the crypto community, for want of a better word, is having a huge argument at the moment about the electricity consumption element of Bitcoin mining. There's a school of thought that it's totally fine. There's a school of thought that this is something that we have to fix. And, they're sort of scrapping about it. But the real divide in the crypto community is between the coiners and the no coiners. It's between the believers and the non-believers, the people who are in crypto at any level and the people that aren't. And these two different sets of people are finding it very difficult to find common ground at the moment. They're talking completely at cross purposes a lot of the time. And, not that it's a big deal, but journalists like me are kind of caught in the middle of it, trying to report on just the facts of what is going on. We have quite an interesting insight into this argument that's going on. I mean, it really is something. Colleagues of mine that, on the rare occasions that they write about crypto, some of them, this is kind of not something they write about very often. They just get blown away by the response you get on Twitter and whatnot, by the true believers, by the adherents. It is just on a completely other level to any other market.
So that's one fascinating idea, that it's culture, it's lifestyle, it's an identity over and above what it is. Now let's go back to see what it is, right? So Bitcoin was pottering around at, let's say, $20, and then it went to, $20,000, and then it went to $60,000. Now it's back down to $35,000. What is driving this up and down? What does the price mean? Talk to me.
Yeah, what does the price mean is a good question. A lot of the time, it's kind of nothing. So as you say, the price has been on quite the ride these past few years. It rattled up to about $20,000 in 2017. Then it crashed, absolutely cratered, went down to 5 or below. And then it kind of drifted higher over the next few years. And then at a certain point last year, everyone's in lockdown. A lot of people didn't have sports to bet on anymore. They were punting around in markets, whether it is meme stocks or cryptocurrencies or whatever it is, and the price just exploded. And you started to see more institutional involvement, more investment banks saying, okay, clients are asking us about this, maybe we'll offer some services. Some breakthrough moments for the price tend to revolve around Elon Musk, the chief exec at Tesla. Quite the character. You never know what he's going to say next, but you do know where he's going to say it predominantly, which is on Twitter. And there's a few things that he's done recently that have really sent the price going crazy. One of them is that in February, he said, first of all, I believe in Bitcoin so strongly that Tesla has amassed $1.5 billion worth in its corporate accounts. And secondly, he said, also, you're going to be able to pay for your Teslas in the US using Bitcoin. And this was kind of a moment, right? For a lot of the Bitcoin believers have been saying, yes, we've always said that Bitcoin is a proper currency. It's a way to buy stuff like any other fiat currency, like dollar, euro, whatever it is. This is part of its evolution into being a means for payment for things. And on that day that he made this commitment, the price added 10% and went to what was then a record at about $55,000. And then it just kept motoring higher and higher and higher from there. And actually, where a lot of the steam came out of this latest rally, some of that is because Musk had a change of heart a couple of weeks ago. And he said, actually, I don't think we should accept Bitcoin as payment for Teslas anymore because of the environmental element, because of all the energy that goes into mining Bitcoin. I don't feel like an environmentally damaging solution can be part of this new world of payments that we have. We need to think again. And that really hurt the price. But what also has hurt the price recently, and it's gone down to about, I think last time I checked, it was about $37,000, is because the Chinese authorities have really cracked down on mining and on people using crypto to pay for things. And there is this sense that regulators everywhere are kind of circling crypto and thinking this is getting too big. We're not really sure about this. There's a lot of consumers getting sucked in here. And so the price has taken a turn for the worse. Now, sure, at $37,000, it's like over 1,000% above where it was at the low after the last rally from 2017. I definitely got it wrong in thinking that after 2017 this thing was done, it was toast. But it's really at a bit of a crossroads now in terms of the price.
So it's very clear to me with my economist hat on that this is not money. It is something, but it's not a currency, right?
It's something.
It's something, but it's not a currency,
something.
right? It's an asset which has no stream of income at all coming from it, and no promise ever of having a stream of income. This is not something like buying shares in Facebook many, many years ago off market if you got a chance to, because there was a potential stream of income coming down. Yeah. Right. This is the digital gold idea, right? Now, therefore, it has to be volatile. It cannot be anything but volatile because it's got nothing back in it except the mood of the day.
It's worth as much as the next person will buy it off you for. It has some value, right? There is this notion of a proof of work concept that goes into the process of mining, where you can demonstrate that your machines have solved a certain puzzle, they've produced a certain line of code, and that has a certain value to people who take that seriously. The best way that I've come across to understand what Bitcoin is the German bank Commerzbank put out a note from its currency trading desk, from its analyst there a couple of months ago, saying, listen, this is why we don't pontificate about Bitcoin. This is why we don't make any price predictions about Bitcoin. Obviously, they were getting questions about it.
Yeah.
And they said, yes, it has some sort of value, but it has a value in the same way that vintage cars or wine or watches have value. That's the way to think about them. There is a community of people who love vintage cars and will spend loads of money on them. And there's the rest of us who are like, it's got wheels and it goes in a straight line. I don't get it. That's it. It's a prestige item for a certain community of people. It does have a value because there's a large enough community of people who value that. But does it have real world uses? Not really. And does it have a whole bunch of risks in front of its price in terms of the regulatory response and other things? Yeah, definitely.
And finally, it also has the potential to turn central banks against it. So if you think one of the great adages in financial markets is don't bet against the Fed. Basically when the people who print the real stuff, the dollars, the euros, and they have a vested interest in watching this from afar and say this is quirky. And now, we spoke to Andy Haldane a couple of months ago, and he said, will central banks create their own type of parallel crypto? Yeah, why not? Why 100%. Why give the monopoly of this to some other crowd when that's our game?
Yeah.
Right? What do you think happened? You know what I mean? It's like giving away your own stuff, right? This is our game. We've been doing this for years. Don't be giving it to some crypto miners. We'll do it ourselves. What do you think happens then when central banks say, okay, I've had enough of this, carry on?
There's a whole load of central banks right now that are working on these central bank digital currencies, which, essentially is, it does what it says on the tin. They're controlled by the central banks. So, for example, it might be a way for governments to put money in people's bank accounts in the event of some sort of pandemic or something, and say, this special sort of digital money, you have to spend it within the next 3 months, and then it disappears. So it's a way that governments and central banks have to control digital money that is not currently available to them, and is really interesting. But yes, so China has got this underway. In the States, the Federal Reserve says that it's looking at it. Lots of central banks are looking into how central bank digital currencies might work, and this is one of the really big risks to crypto, is that if the use case is speed of transfers, or cross-border transfers, or whatever it is, a lot of these supposed benefits can just be wiped out at a stroke by a lot of official central bank digital currencies. That's a big risk to them, but it's not the only risk to crypto prices. So a lot of regulators around the world are very worried about the consumers that are getting sucked in here. There's a lot of quite sketchy ads kicking around on the internet promising untold riches to people who buy crypto. That, when you're in London, there are ads all over the tube. Everywhere you go, it's buy crypto, buy crypto, buy crypto. And lots of regulators are sort of stepping in here and saying, what about the consumer protection angle? Even the Advertising Standards Agency in the UK has stepped into on one ad and said, you're making this look easier than it is in real life. And in the States, the SEC, the kind of main financial regulator over there, they've got a new guy in charge who is not to be messed with, Gary Gensler, and he has said, we're looking at whether consumers have got the right degree of protection here. This is a big risk. And in addition, like the European Central Bank has mentioned at least a couple of times that it's looking at the environmental impact of crypto. This is something that they're taking seriously. In China, one of the things that the People's Bank of China is cracking down on is crypto mining. There is just this vast amount of energy that goes into producing these coins that runs counter to what a lot of countries are trying to achieve with their carbon targets. Yeah. So there's a bunch of things that can go wrong.
But if we finally just leave it on, there's one thing that can go right for them, which is if you believe that at its core, crypto is a digital gold, and scarcity will prevent. And you believe that the world is embarking on MMT, it's embarking on hyper QE, it's embarking on basically a monetary solution, which is let's just print as much as we can, let's issue as much debt as we can, let's try and spend our way out of this crisis, that you're thinking as a crypto person on the believer side, well, then I'm kind of in the right, that history is on my side, that large currencies could well collapse in an inflationary inferno, and I'll be sitting on my Bitcoin, and I will be not only wealthy, but I will be able to buy all sorts of real stuff with this fantastically secure asset that I have. To what extent that is the narrative that most of them believe?
That is the narrative that a lot of them believe. I would argue that, in the event that there is some sort of global collapse in currencies, which is a little bit of a difficult thing to get your head around, owning crypto probably isn't going to be the answer. If the entire banking system has collapsed, then your ability to go to the shop and buy a pint of milk with, a tiny fraction of a Bitcoin is going to be constrained, I would suggest. So look, there definitely is an argument that you could get rich off this. And when the value of certain other assets collapses, perhaps Bitcoin or other cryptos will prove to be more resilient. There is also definitely a possibility that the crypto market can get around this carbon problem that it has by shifting the way that the coins are produced, moving away from this proof of work model where computers like fire puzzles at each other until one of them solves them and wins a coin, towards a proof of stake model, which is much lighter on the energy intensity. There are coins that are already working on moving towards that model. If that's the case, then that will take out one of the big hurdles for crypto. So, I think it's become too big to kill. I think central banks accept that now. I think it's going to kick around. I think it will retain a certain value. Whatever the next person is prepared to pay you for it, that will be the value.
Yeah.
That's embedded in it. But does that mean that it makes sense to hold it? I mean, it really depends on whether you are in or out of that belief system that tells you that this makes sense. And once you're in that club, once you believe that it makes sense, once you believe that it's the future, then everything else is worth it. The carbon intensity is worth it. The the way that crypto is wrapped up with, illicit activity like hacking, you'll notice every time a big organization gets hacked, the ransom is always Bitcoin, please. And that's also a problem for crypto.
Yeah, no, our HSC was hacked the other day.
Exactly.
Our health service was hacked the other day. And of course, the ransom was Bitcoin.
Yeah.
John paid it all out of his account.
I did, yeah.
Yeah, it's all sorted. And he got 2 Pfizer jabs and AstraZeneca.
I sorted it all out, Mac. Don't worry about it.
Okay. And you're COVID-free.
I'm COVID-free.
Brilliant. All right, Katie, we'll leave it there. Thank you so much.
Thanks for having me.
I'll talk to you soon.
Looking at the other side of Bitcoin today compared to Tuesday, it does seem that like Bitcoin is so much more than just either an asset or a currency or whatever way you want to describe it. It's a lot deeper than that. It's more cultural in many ways.
It is cultural. And it goes to, I think, there's 2 or 3 fascinating roots in it, right? My interest in monetary history and all that malarkey.
Yeah.
But there always has been a conflict at the source of money about who controls it. And there's always been a fear that in the wrong hands, money, like, for example, the dollar or the euro, can profoundly unsettle a society. And therefore, there always are people who say, we are going to actually create an insurance policy against that. I mean, the mad thing is, we forget that Hitler figured out the power of money profoundly, right?
How so?
In fact, I tell you, it was actually Lenin said, Vladimir Lenin, right? Not John. He said, nothing so undermines a society as debasing their currency or debauching their currency. So Lenin understood what the Bitcoiners are afraid of, which is inflation.
Yeah.
And Hitler took it one better. Hitler had a huge operation called Operation Bernard, right?
Right.
And it was an operation to drop banknotes, sterling notes, into the UK and debase sterling during the Second World War. And they
forged banknotes, obviously.
Yeah. And in actual fact, the concentration camp Ravensbrück, which is a concentration camp, became the epicenter of a forgery operation by the Nazis to drop. Yeah, this is a huge story, right? And what they wanted to do is they wanted to undermine the British war effort,
right,
by creating inflation within Britain, by dropping these banknotes into the UK. That this would undermine British inflation, would undermine sterling, and this would confuse the British population so much that they would rise up against the British government, or would be part of the destabilization force. So what you have is you've many historical examples of people using money to engineer instability.
But clearly that didn't work, or they didn't follow through on it, or what happened there?
It's an amazing story. The banknotes ended up being buried in the side of a lake in Austria at the very end of the Second World War. What actually happened, now this is how mad the Nazis were, right? So they got, and again, it's the whole thing, they went into Auschwitz, they went to all these places, and they got typically, they found workers, Jewish, non-Jewish, who went in and they were printers. So they looked for printers.
Right.
Because the core of counterfeiting is a printer.
Of course.
Right? You have to be a printer. And artists and whatever. And of course, they spent an enormous amount of time and effort in printing these sterling banknotes. Sterling is a very hard currency to forge, right? One of the hardest currencies to forge. But then, of course, the Nazis, being such corrupt characters, figured out that what was actually happening between 1942, 1943, 1944 was these massive shortages of everything in Europe, right? And the Nazi currency was worthless, the German currency, the German Reichmark. But so the Nazis started buying counterfeit stuff with counterfeit stuff, right? So rather than so Hitler organized the whole thing, but of course Hitler was losing his power. Yeah. So the average Nazi dude who was overseeing, the average SS dude, who was overseeing I've got £1 million here, was taking the £1 million and buying art with it. And then, amazingly, you know what they bought? The Nazis bought their passage out of Europe at the end with counterfeited sterling, which they traded with
to South America and stuff.
They traded with black marketeers to pay the black marketeers, who are also paying the Vatican and the Catholic Church to open that. If you ever look at there's a great podcast called The Rat Line by Philippe Sands. Yeah. Very worth it. Yeah. So what happened was the Nazis.
That's great.
Yeah, no, it's true. But they spent a whole time. But it comes back to this. And anyway, At the end,
Yeah.
what happened was most of the Nazis, because the Russians were coming in northern Germany, the Americans were coming in western Germany, the only part of the German Reich that was unmolested by foreigners was that part in southern Czechoslovakia and Austria.
Yeah.
So all the loot ended up in these parts of Austria. Part of the loot was boxes of currency.
Wow.
Which the Nazis
Wow, that's an amazing story.
It's a great story, right? But when it comes back to this idea, not that Bitcoiners are Nazis, but no, it comes back to this idea that once you destabilize the currency, it leads to all sorts of weird reactions.
Yeah.
And Bitcoin is one of those reactions. But the other reaction I find fascinating is it's a youth phenomenon. It's a phenomenon of the youth, Bitcoin.
Right.
So if you talk to younger people, many of them, I'm talking in their late teens, early 20s, will ask me about crypto. What do you think of crypto? Right?
They're more open to it.
They're more open to it. And it's because their world is a sort of a crypto world. Like if you look, it's, crypto, Bitcoin starts in 2008. The iPhone, the first iPhone was launched in 2007.
Yeah.
Okay. Facebook really becomes a thing in the late noughties, like 2008. SpaceX, Elon Musk's company, is a 2008 company.
Yeah.
And for our generation, 2008 signals the end of something. It's the end of the Celtic Tiger. It's the collapse of the housing market. It's the collapse of the banks. It's the onset of a recession. It's the end of the good times, right? As Tommy Tiernan always said, I love this, they keep saying we spend too much money in the good times. And Tommy says, they were the fucking good times. That's why you spend money in the good times, right? So for our generation, it's great, isn't it? So for our generation, 2008 is the end of something big.
Yes.
But for the younger generation, it's the beginning of something. It's the start of something big. It's the start of their world. It's the start of the iPhone. Therefore, it's the start of the app culture. Therefore, it's the start of WhatsApp. Therefore, it's the start of all these sort of things.
The digital world.
The whole digital world. So in a way, that's the moment. 2008 is the event. It's the year everything changes and for the better.
Do you know what? That's also the year that podcast took off.
Because of the iPhone.
Because of the iPhone. Because all of a sudden, podcasts became mobile.
Exactly.
And then that just gave it a huge boost. And that's probably the best thing that ever came out.
Absolutely, John. Absolutely. It was certainly the best thing's ever happened to you and me. But listen, so that's the idea that Spotify launches in 2008. So if you go back, 2008 is a pivotal year from Spotify to Bitcoin to SpaceX to podcasting to the iPhone, all these things. So the generation that lived before 2008 has one relationship with lots of things, including money. And the generation that came of age in 2008 as children, but have actually been living in the shadow of 2008. We would say the shadow of 2008. They would say in the glory of 2008. They have a totally different attitude to money.
They do.
To crypto, to technology, to the institutions that we regard as essential, like central banks and governments and yada, yada. They have a much looser, much more... It's like a brave new world attitude.
But it's also a very obvious difference.
Yeah.
And it puts me in mind of Neil Howe, who speaks of this kind of handover from generation to generation.
Yeah.
And that seems to be a really kind of key, stark handover point.
Yeah, exactly. So it's the whole idea that history cannot be seen, or contemporary even analysis cannot be seen in the context of one event having the same impact on generations. So you just think that's a great example, 2008. 2008 for our generation is an apocalyptic year, right?
Yeah.
For the generation coming behind us, it's a baptismal year. It's a new year. It's a fantastic year. And so their relationship with technology, of which Bitcoin is part of, is profoundly different to our relationship with technology. And one of the problems, and I'm always aware of it on the podcast, is that we've got to see the world not through our generational lens, not only through their generational lens, but through a blended generational lens to explain why Bitcoin is a thing. It's a thing because the generation coming behind us and coming behind them have a profoundly different relationship, A, with technology, but also B, with the institutions of the state. And if we want to understand them, we've got to appreciate that they're starting at a totally different point. To to all you Patreons out there, thank you so much for supporting us. We couldn't do this without your support. It means a huge amount to us. Also, all your feedback, your suggestions, your comments, our comments to you, our replies to you, really is the essence of the whole thing. So again, thank you very much. And for all of you who might want to support us, check us out, patreon.com/David Mike Williams.